Good morning and welcome to the morning call for Friday the 10th of March 2017. Bit of a trilogy going on inside the bulk commodity store and you can't go past it. Have a look at what's going on in WTI. It's slid well below 50 US a barrel. That's going to be a very interesting inflection point whether or not you actually see some really good support picking it up. It had really held on to those sort of top levels, 50 to about 58 US a barrel, and it's breaking out of that at the moment, and that's a really interesting thing to see. And one suggestion would be that you would probably expect in the current market a bit of pickup, but clearly what happened with the EIA and the fact that inventories are really ramping up faster than expected is creating a little bit of equilibrium breakdown, and that's one thing to watch. Second part is gold. Gold is very much thinking about and probably will break below 1,200 US an ounce. And the reason for it is clearly what I'll talk about at the end of this is around US rates and the fact that bond markets are becoming very, very attractive indeed. And finally, from an Australian-centric point of view, iron ore is continuing its slide lower. Although it was only down 0.5 of 1%, futures markets in China are very, very soft. Volumes are very, very low. And this time of year, you always get a really soft period for demand from Chinese markets, and that's therefore likely to see iron ore push lower. ADR from BHP was down 1.9%. That's to go with yesterday's movement. Yes, it was ex-dividend, but it was quite strong indeed and may actually filter through even further. That's tonight, that's today. Non-farm payroll is the other part of it, so again, another soft part. But I really want to move to what happens next week. First part, admin. On the weekend, the US actually puts their clocks forward for daylight savings. So those of us here in Australia, be aware that trading now moves forward 1 hour. So the main session starts at 7 a.m. Australian Eastern Daylight Savings Time, and the post-market session trading, if you are trading in US stocks, finishes at 11 a.m. rather than 12. So just remember that. And then next week, you can't go past the fact that it's going to be one of the biggest weeks around with the Fed meeting on Thursday morning for us here. There's a plethora of US data as well. CPI comes out the day before. Retail numbers come out on Tuesday. You've then also got some Australian data with also our employment numbers as well. So next week is huge from a macro perspective. I've deliberately put up there, again, the currencies. Have a look, for instance, at the Aussie bulk commodity story is very, very weak. Have a look also at the yen, and the yen at the moment is probably enjoying the fact that it is breaking down on that US dollar strength. So getting back to what I said before, very, very quickly, gold is a really interesting trade at the moment because clearly most people are moving to the safe haven assets that are bonds, knowing and pretty much fully expecting to see rate rises moving from the actual Fed movement rather than anything else, and getting in at a reasonable price considering the sell-off we've seen. That yield is incredibly more attractive than an inert metal and probably explains the gold breakdown. So next week, it's actually my trade to really watch. Does gold break below 1,200 US an ounce and hold? And is that therefore transferred across into things like the 10-year, 5 and 2? The 5 and 2 year are on fire at the moment, and certainly an area that is creating quite a lot of interest and quite a lot of questioning because it's been sold off jumping that yield up. But will it be picked up when they actually see the bond movement, when we see the Fed movement move? It's the question everybody's asking, and why next week will be very, very exciting. Have a great weekend. See you on Monday.